audio real quick. I think we're all good. I'm picking up my mic today, so next stream we should have a mic. I'm eating some crucially as a breakfast, but let's get straight into it. Bitcoin still in the range. It's looking like we have been on the right side of bias so far, not being bullish until we can close above this supply zone. And the macro idea that I had is still in play, where we have that potential big Model 1 accumulation event, where this is a situation where a lot of people will get trapped. And what would be even better if this capitulation event could actually be a PO3 of this local range. I would actually really like that. So that would mean what I would want for that situation to happen. Doesn't have to happen, but this would be your range. Okay. Let's make it range. This will be your supply or your manipulation of retail positions. And then this will be the bullish expansion following. The only thing with this idea, it's definitely an idea. I mean, I would want an aggressive break. So let's say we have this, and then boom, we get that break, right? That absolutely aggressive break where all of crypto Twitter will be like, oh no. Where they want an aggressive break, followed by a range, and then we sweep the low. That's where I will definitely take a long position. And then we form some Model 2 or potentially a Model 1, but let's say it's going to be a Model 2 Rykoff right now, right? And then we get back acceptance back inside, and then boom, we pump, boom. Something like this. I would absolutely love that, where you have this, so you have this PO3, from this local range, and then you have a Model 1 on the high time frame. That's I would absolutely love this idea. The only problem is that normally during summary range, this would mean an aggressive pump, right? So maybe what happens is we do this does play out. We take the all-time high from there, and then we sweep the all-time high, and we create yet another range, and then maybe we come down and then create like a big Model 1 that goes over in a Model 2, just because summer normally is kind of volumeless and not that much crypto activity, which is what you would like to see for a bottom to form. But this is definitely an idea that can play out. So just laying it out here. So if it does play out, we're gonna absolutely be laughing. Just remember, really, remember it in your head. I've seen it too many times. The more aggressive this break, the better. The more bullish it is. Sounds so weird, but the more aggressive this break, the more bullish it is, because you want as much manipulation as possible. So I would really like this to play out, and this is not like time related, so it can extend way longer, but yeah, we're kind of here mid-July, so maybe you can extend it to like August or September whatsoever, but I would really like a situation like this, So that's kind of the main outlook, but we cannot say anything bullish, in my opinion, until we can surpass that range high that we deviated, you know? So this is just a quick macro outlook, an idea that I would absolutely love. However, it's not going to give us local scalp setups, right? So locally speaking, we have a range and we deviate the range high. And just following internal market structure up, I'm going to ignore all of this. Just, I'll put in the chart for you guys. So you had that lower high and you had that lower low. Okay. And then you have the higher high, or the lower low is actually right here. Okay. And then you have a higher low and you have a higher high, and you have a higher low and you have a higher high, and then boom, you have a lower high or a lower low. So once you break this, because this is then called a market structure break, right? What is expectational order flow? A lower high for a lower low. Lower high for a lower low. And then again, a lower high for a lower low. So on the 4 hour, we're trending down within this range. However, the hope for the bulls, I would say, for potential rotation back up towards the range high, is that what we have right here could potentially be an internal Model 1 accumulation. Where this is your tap 1, this is your 2, and this is your 3, right? That's the hope for the bulls, to have a sweep back up. I have no idea if you can hear me chew, but if you do, I'm sorry. Okay. Okay, knowing that this could potentially be a Model 1, let's zoom in. Oh, at the value area low. So this range is kind of nice. This range is the volume area low to the volume area high. It's kind of nice. I don't think what it did. Look at this 30 minute bat point. I'm looking for a reason why it had to take that low again, and having this 30-minute order block with imbalance chilling there. That could have been the reason, It's trying to form a nice low, that's for sure. The thing is, I would have already been long if price gave me something better. I would say a good close below this low at 61,900-ish. A good close below there, like a good close around 61,700. That would invalidate. I would not use this Model 1 anymore. For me, that would be an invalidation of the potential Model 1. For the Model 1 to play out right now, you want to immediately see this high break, get acceptance back inside, and then continue higher, right? Because locally, the deviation is its own little range, where you have your range low and you have your range high, like this. And we deviate the range low, and kind of looks like we have our own little Model 2 accumulation in here, with our 1 tap, our 2 tap, and our 3 tap, or this is going to be the target, there was just no trade because we want to see structure break back to bullish from this point towards this point, and there was no valid market structure to use because price decided to have the ugliest candles ever seen in mankind. If you just see these candles in general on the 1 minute, compare this London volume towards this. You see how much cleaner these candles look than even these candles, you know, or these. So really, pre-London was better. 1 hour before London was actually better. But yeah, it is what it is. Hopefully, it will pick back up later today. Good. So we could be having a model 2 accumulation going on here, but there was no entry, you know. And I don't really see a place where price has to come back to for a potential LPS or a second LPS. And I wouldn't trade this in the middle with those candles. If you market order in here, you actually move price. I'm just gonna watch the range high. I'm gonna extend the range low. I'm gonna watch the range low. And we can either look for just a range high deviation play with a break back inside, or we break out, we come back, and we retest it with a reconfirmation. If we come lower, I would look for a sweep of the low for potential its own little mini model 1, or we break towards that 61,700 and we backtest, and I'll potentially try to short a backtest. That's kind of what I'm looking at. In general, on the more macro view, I'm still a bit more bearish until we take out this range low that we put in. Also, because I was just before I started the stream, I was actually checking this volume area. Most people on Twitter have used or have dragged it like this, which is also fine. I just like to use it from when I start my range, which is here. And we also had that perfect volume area low back test after losing it again here. We've kind of been flopping and groping around it, but this is not the most bullish sign, you know, perfectly rejecting from the macro volume area low. So I'm still aiming towards that range low and then potentially like a capitulation event, and then watch these local setups right here, right? That's kind of the only thing that we can do right now. Okay, gold. Let me take one more bite. So, recapping what I said last time on gold is that we're stuck between two potential scenarios on a bit of a bigger time frame. We have a 4-hour break, right? And this can just be a lower high for a lower low. But this lower high could also come here, you know? So you don't know. You know when you break market structure from this low towards this high, which we have not, okay? So at the same time, this could just go higher, because if you zoom out on, let's say, like the 18-hour or the daily, this whole down move can just be a higher low or a higher high, because your daily low is right around here, right? So you're stuck between those two scenarios. So all we can do is just play the local range. So I was following the market structure from this low up, right? Where you had that lower high, lower low, and that break. Then we had the high, we SFP the high, SFP the low, This is where we had that model 2 distribution going over in the model 1 accumulation. Then we broke higher, or we wicked did, but then still put in a higher low for a higher high. So this is our most recent range. And I actually had this range. I did some TA on gold before going to bed Sunday. We had this local range. And I actually had two such nice setups. I was watching a long from here, and I was watching a short from here. Just because if we get rid of this equilibrium, right, we get rid of this EQ, we had the deviation of the range high hitting that 10-minute supply zone, or more, let's call it range supply, okay? And we had a nice deviation of it. And when the deviation is this big, it's kind of, and with big, I don't mean like that high up per se, but like it's a good deviation, it took its time. Took its time to deviate. And when you have a deviation that took its time like this, it oftentimes has the power and the strength to have that full-on rotation towards the range low. If you just have a local SFP, it doesn't really have to come down all the way to the range low unless you're like backed by Wyckoff. But this is just the first deviation, and there's no Wyckoff here yet, the way I use Wyckoff. So in that case, if it just SFPs like this, it doesn't have to come back down all the way. But when the deviation takes its time, it does have the strength. So we got the deviation, and the extreme demand, aka the last demand remaining before taking the range low, was hit. And there was this 30-minute order block with imbalance on it, okay? But what did we do? In order to get towards that order block here, we actually broke market structure on the 10-minute time frame. So we tried to break it right here, but we SFP'd it. But supply was still respected. We kind of rejected from this range supply, and then we ended up breaking market structure right here. Boom. When you get such a good pullback, or like when you get such a good reaction of a market structure level, and you pull away like this, I like to extend the break of structure towards the low of the wick. If it's just one candle close and the candle after immediately comes back down, I will just use the same level. So yeah, we got a bounce from there, but I was still looking. On Sunday, I realized, you know what? Yes, we get a bounce from here, but the moment we break market structure from the low up, we can say that the lower high has took place or has been put in, and that we can expect a rotation down towards this range low, or not particularly range low, but towards this low on the 10-minute pool. However, what is their stop price? Because we just hit the last demand remaining before taking the range low. So if we lose this low again, most likely we're going towards the range low now. The last soldier, aka this demand, has been beaten. So I had this on my chart, the supply zone, where we potentially could hit the where the lower high could have taken place. However, market structure is king, right? So just following the market structure from the low up, we had the high, higher low, higher high, higher low, higher high, higher low, higher high, break of structure, lower low, okay? So this is where we had our lower low. Boom, break. So what I had on my chart Sunday is I had this low, and then I was just waiting for this to break and potentially short a retest. That was literally what I had. So what happened, I did my TA Sunday around here. Literally, I did it right around here. And then I went to bed, And what happened is that actually on Monday open, where I wasn't behind my PC anymore, we broke it, okay? So now we have a second break of structure. So I will definitely start to look for shorts if we can, I will definitely start to look for shorts if we get a retrace, and short the retrace. the back test. So this is your whole range supply, but I really like the way this looks, these two candles. So following market structure from the low up, right? Staying on the same time frame, not even changing time frames. You came up, came down, put in a higher high, SFP'd the low. That's not a break, guys. It SFP'd it. And then we went higher. Did we go there? Boom, and then boom. Okay? So staying on the 5-minute, just purely staying on the 5-minute, you had your break or your reconfirmation, I would say. It's called I, internal break of structure, right on this candle. So you could have easily shorted here, even followed internal market structure to have a tighter stop loss. So internal market structure, meaning, or fractal, whatever you want to call it, following the market structure from the top down, boom, and even have a tighter stop if you want, and put it 2 market structure highs back to be safe, and then target that range low, boom, and we'll win a 4-hour trade. If you followed the 5-minute, what I would have done in this situation is already short the 2-minute break right on this candle and see if the 5-minute breaks as well, So I would short here on the break, put my stop above the high, watch what happens at this internal low. Well, on this candle, we see that we also broke the internal low, and then you have an even better R. Easy trade following the order flow objective of this deviation, which would have been the range low, and then entering on a market structure continuation type of trade, right? So that was such an easy trade, but unfortunately I missed it, which is not, it's unfortunate, but like, cannot stay awake 2 a.m. in the morning when it's a Monday. So what happened since? So we swept the low, and here I was looking for a long because I think it was 10-minute demand that I had. Yeah, so we had this 10-minute order block below the range low. So I was like, you know what? Let's look for a classic setup where we just put this EQ back in. Let's look for a classic setup where we SFP the range low or we deviate the range low and we break back inside, also breaking back inside the volume area. And then we can potentially watch for a rotation back up, So watching the volume area as well. Kind of have the volume area low in the POC hovering around this area and coming down towards our POI zone. Our market structure was down, up, down, and then here we had our break. However, I would not enter on this candle break just because if you also pull the volume area right here, yes, it's a break back inside, but we just had such an aggressive move and the break was so high. So the break was so high up, you had to have such a big move up in order to break that what's going to happen most likely is, especially having this supply zone here, is that either it could be a fake break just to hit the supply zone and go lower, but a retrace is most likely expected, right? Just because you had such a bullish move up in order to come towards your market structure high, most likely you're not going to just squeeze from there. And if you do, that's fine. But you can expect the retrace when the move up is that big. And also, if I enter here and I have to put my stop below the low just to target the high, that's a 1.8 RR. It's not even enough, right? So being patient here was definitely the better play. What I would enter potentially is, what? Now we have our range low and we have the sweep of the range low. Potentially this could already be our second or our third tap, potentially having a model 2 accumulation here. So I would enter a internal break. I don't know why that's like that here. So I would enter an internal break from the market structure from the top down. And then you can either be very risky and go on the 1 minute and enter on this break, or you be safer and enter on more like a 2 minute market structure change, which was right around here, but then your RR would also be less good. That's the sacrifice that we that we have. But here you had an SFP first, but let's extend it for now. And then enter on a break right around here. Putting your stop loss in this situation, I would put my stop loss like just the same time or the same way I did up there, two internal market structure points back, just to be more safe. So if you enter on the break, this is your first internal, this is your second internal, and then potentially aim towards the range high, which immediately improves RRR from a 1.8 to a 5.7. Also, in this situation, the time of entry was 6:10, and my alarm goes at 8. So wasn't awake for this. Then the main issue was actually I was waiting. So then I woke up, right? I saw that both my setups played out, and I was like, shit, I wasn't awake for it. And then we can check, you know what? Maybe we can find another long on a back test of it for a LPS or a second LPS, right? Came down right here. Had that fake break, but I didn't get trapped there. And then came lower and then came higher. However, it's a Monday morning, guys. I'm getting into it. This break was so high up. Even if I put my stop here, and what I mean with here is actually this internal low from the high up, right? Just to improve RRR. Putting my stop below there, again, just to have a full-on rotation back up. Actually, in this situation, it's a 3RR. I just didn't like to use a stop this big. 0.25? That's a bit crazy. We did have a nice back test of that volume area low. Looking at it now. Did we take this high? Yeah, so the thing is, well, in this situation, you could de-risk yourself right now. Because after entering here on that internal break, you created another market structure leg. So now your stop can go below this market structure leg, which means you're basically in a break-even trade, right? I just didn't like to enter that high up with a stop loss that big, Yes, if I aim for the max target, which it can hit, then that could have been a trade. But what I also like to take into consideration is how fast can I de-risk myself. So if I enter on, like, let's say, if I enter on this break, and this is a low time frame break, and my stop goes below here, and my entry is right here, I know the moment we have our first retrace and we go up, boom, my stop loss goes up to there, and I'm already de-risked. With a stop this big, that takes some time, But if you took that trade, it is a valid setup. But I would already be de-risked by now. Because above us, there's not that much. We have that 3-minute order block, which we missed the first time I was looking at it, right here. I think we also had a 10-minute block above that, yeah. I think this is also like a volume area high deviation type of supply zone. Yeah, so I would watch these two zones. And besides that, I would just watch the range high as well. And if we come back, I would watch this 30-minute block right here. Yeah, I would watch this for potential long following this Model 2 play. Yeah. But I would just watch your market structure from the top down, because technically the range supply begins all the way here, or the range demand. So I would just watch the market structure from the top down, and when that breaks, I would go long. Okay. Then I would look for scalp plays, scalp shorts, on these two plays right here, preferably the first one. Just because this, yeah, how does this look on the lower time frame? Yeah, I'll still look at it, but I prefer the first one, just because it's like with the volume area high, being close by it could be like a nice deviation. Okay. So watch for short scalps there. Watch for a long scalp here. Putting my boom, boom. When we break this high, we're most likely going to rotate back up towards that high, and then we're probably going to hit this supply zone. Bounce this 1 minute demand zone. Oh, it's not worth it. It's not worth it. Euro. I was telling you guys about that potential exhaustion that I was seeing, where the breaks were getting, like, these breaks were kind of equal, and then we're getting less and less, where this is like not even a break at all. And we are leaving this trail of liquidity behind. And again, I'm going to repeat it until we hit it. It's very weird to have a Model 2 accumulation going on here. If it's going to be a Model 2 accumulation, if we miss this daily demand zone, it's a must. It's a must tap, especially if we have this this big distribution above us. You want to see this get tapped in order to have like a proper, potentially a proper accumulation. So we saw that exhaustion, and then we created this range. Told you guys about this short. What happened since then is we SFP'd the low, and we came up. This was that news wick. We're just gonna call it news supply now. Wick supply. Extend our range. Oh. We came into that supply, wicked it, and then broke it. Checking our volume profile. Losing this volume area low. Yeah, it's not that much volume here. Could just come down. Sending an alert on this low. And then if we come back up, I would for sure look for a back test of this range supply for a short. It's also a back test of the volume area low. back up. Oh. I would look for a short if we get a back test. I'm gonna send an alert right here. Alert at the range low. Delete this alert. Then is there something below that range low that could hold price up? Nothing on the 1. I see a 45-minute zone. I see a 30-minute zone. A 15-minute zone. Is this a tap? Because then it will be very... Ooh. This high 0.66, this low 0.6601. This is now, let's call this a tap because it's so close. So I'm checking the high of this candle right here. It says it right here, okay? This high, 0.066, and this low, which is right there, is 0.06601. So it's kind of tap. So then you can say you have demand, create demand on the 30-minute, hovering around that range low. So if price is going to get a bounce, it's probably from this area. And in that situation, this could actually turn into a model 1, you know, because you have your first sweep. So I would definitely look for a short on the back test, take it towards the range low, potentially look for a long there, you know, kind of fulfilling this model 2 distribution and that going over into a model 1 accumulation. If you surpass this green demand, so if we close a candle below this demand zone, I don't really see price stopping from taking until we take all this liquidity. Okay? And then we can talk about macro swing longs if we get some like a 4-hour market structure change in here. Yeah. We get like a 4-hour market structure change in here, then we could talk about swing longs. But what we do have to realize is something I forgot to say last time, and I just remembered it now, is that ignore the drawings, right? But if we go on the weekly time frame, I'm just gonna delete it for you guys. If we go on the weekly time frame and you check this low, it's a very nice low, meaning you have your down candle, you have a wick, and then you close higher, right? It's a three candle formation that's very nice. It has that rounding up effect. Down candle, SFP, it closed higher than that candle. Okay. We had the exact same right here, but then reverse. Again, the up candle, wick, and then close lower, right? It's a nice formation. If you use bars, you can even see it better here. You know, it's a nice, this is a nice bottom. And we had a nice top here. It's the exact same. 1, 2, 3, and then here, 1, 2, 3. What you can immediately see, by the way, is what I'm seeing now, is that we went up and our weekly candle has no wick to the downside, 0. So that kind of means that's not bullish, you know, because if you just watch these candles, all these candles here have a wick on both sides, and this candle doesn't have a wick on the downside. So that's always a bearish indication that needs to be fixed. That's probably why we're coming down, and we're going to take out the weekly open. Okay. But what happened? Look what happened after you form a nice formation of these candles. Look what happens. The next candle goes up, and then we go lower. Okay. Go up, higher, backtest it, go lower. And then the same thing happened here. Here. Right here, we're gonna have that nice formation. Okay? What happened the next candle? We went down and higher. Here we went up and lower. Let me check if I see more. So weekly time frame. And here you didn't really have it. So the last two times in this range it happened, the next weekly candle, we went, if we were having a nice bottom, you know, lower and higher, for when having a nice top, higher and lower. Okay. So now we have the beautiful bottom again. And we have no wick to the downside on this candle. But in general, what should we expect just looking back? I hate to say it because I want this zone to get hit, but what we can expect is lower and then higher. And this doesn't have to be that deep, but this is what you would generally expect when you're forming a nice bottom like this, right? So let's delete these drawings. That's what you would expect. So now I'm gonna check what that weekly open is. Where is that weekly open? It must be here, yeah. See how this candle doesn't have a wick to the downside? That's the weekly open, for sure. Right here. So if we take out that low, that weekly candle here is fixed, okay? So now putting our TA back in, oh boy, I would love that idea. Then that could be a swing trade. He never really broke market structure back to bullish, just because that move down had no structure. But I would love this idea. But at the same time, it could also just form a model too, you know? So I'm checking if there's also demand above the market structure low. Yeah, it's not the best, but it is there. Oh, it's not the best, but it is there. Let me just put it in, you know? Double checking this again. Yeah. Okay. I would love this play right here. Creating a model one here. I would absolutely love this. If you have this trade, I am not taking profit until that high, and I will not take that much profit there. I will see what happens, but I would literally be aiming for this inefficiency fill right here. Just this whole thing, I would want this to fill, and I would take profit right there. Okay, that will be my target. Absolutely love this trade. Could be a swing trade, like a potential. Like if you actually hold it and you put your stop below that low and you target the high until that fill, this could be a 22 RR trade, 22%. Absolute beauty. Okay. However, the weekly candle is also fixed if we go and tap this demand. And we could also potentially create a model 2 instead of a model 1. However, we have such good looking demand remaining below us. I would 100% prefer this lower idea, but I will also pay attention to this. However, I don't think a single break is going to do it for me. Maybe if we create some sort of a demand chain, or we have a break with an internal break, you know, reconfirmation, then I would give it a shot. But overall, I would absolutely love the lower idea more. So yeah, put your alerts here. Let me also put my alert there. Alert there, alert there. Okay. Okay, so I'm gonna recap it real quick so I can post a 60-second clip for other people to know about this idea. And then I will finish the stream. Okay, so let me recap it. Going on the weekly time frame, we have been forming a nice bottom. Okay, deleting all of this, we have been forming a nice bottom, this 3-candle formation. What's normally expected after a 3-candle formation like this, if we just look back within this range, we had one here and we had one here. What happened? The 4th candle. So the first candle after the 3-candle formation. Right here you see a tiny wick to the downside and then we closed higher, and here you see a wick to the upside and then we went lower. So what could happen is, and I hate to say it because I want this daily order block with imbalance to get hit, is that what can we expect is this candle to have a wick to the downside and then close higher, and we'll finish the week higher. Okay, just using these candle formations, that is what could happen. Then looking and zooming in, we can actually see that this candle doesn't even have a wick to the downside yet, which is not bullish, because if you look at all these candles, every candle has a wick on the upside and the downside. So normally when you have a candle that doesn't have that, it will get fixed. And this is a weekly candle, so it can take 4 days to get fixed. But what can we expect? Maybe we can expect to go lower, fix the candle, and then close higher, right? Just looking at this candle formation. Well, then zooming in is we have been actually uptrending and we have broken market structure back to bullish. And locally speaking, we have this range going on here. Okay. And what's hiding behind this range low is a 30-minute demand zone. It's not just a 30-minute demand zone, it's actually part of a demand chain, because we hit this 30-minute OBM that created this 30-minute order OBM, and then we went higher. Okay, so what we could have here is a potential Model 1 Wyckoff accumulation in the making, where this was our first initial range low, this is our first sweep of the range low, and then right here, we could actually sweep this low once more, hit that 30-minute order block, and then create a Model 1 accumulation, targeting all the way, I would target all the way up here, this whole inefficiency fill. And if we zoom in to check where that weekly candle gets fixed, we can immediately see that it's on the Sunday open, on the Monday open at 11, where this candle doesn't have a wick as well. That's our weekly open. We can double check it. There you go. That's our weekly open. So our weekly candle gets fixed if we go below this red line. So this idea, I would absolutely love it. However, we have to be aware that there is still this little demand range remaining before taking the range low, which we could also tap into, and also fix the weekly candle if we tap into it. So I would also watch my market structure in this green demand zone, but I would love this lower idea. Okay, I would love the Model 1 idea. And if we get it, your first take profit is going to be the range high, but I would pay close attention to what happens at the range high, so we can potentially take it up all the way towards this inefficiency fill. Because if we look on the left of this range high, there's kind of nothing except a few highs and then just inefficiency, right? So yeah, be aware of this scenario, and it could be a potentially like 20 RR setup. So thank you for watching, guys. It was a bit of a longer stream, but not that much is happening. So it's a Monday. I think most of my money is made after Tuesday and not particularly Monday. But I hope you guys have a good trading week. If I take any trades today, I will see you at the post-trading analysis video tonight. Peace.